It's Monday, and that means another week of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us an update for the brokers. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Monday. I'm Zach Strickland, bringing you today's carrier update presented by PowerFleet. So looking at the volumes, we're starting to see some significant divergence from last year in terms of year-over-year volume. So 9,700 this year versus about a 9,600 year-over-year, roughly 9,573 year-over-year. So we are seeing some pretty big dispersion in terms of volumes growing this year a little bit sooner than expected. Normally you don't see this until early March, maybe even mid-March some years, but we do have about a 2%, 1.5% I should say, differential between volumes this year versus last year. So some pretty good signs there. So that's going to be on the contracted volume side. Breaking it down, a lot of that is also driven by the dry van. So dry van outbound tender volume index, 7,043 for the United States. The reefer sitting down around 1,335, settling in a little bit. We had a lot of overheated activity here, or I don't want to say overheated, but we definitely had some elevation in January on the reefer side for the freeze protection folks out there. But again, dry van volumes really starting to pick up across the country. Looking at some of the bigger markets in the country, not a lot of volatility right now, especially in terms of tender rejection rates. You're not seeing any real, you don't see any real big greens here on the map, not a lot of, huge shifts one way or the other. So we're in this flat, stable period throughout the country. Bigger markets, Atlanta, Ontario, Harrisburg, all sitting roughly flat day over day. Not a lot of activity week over week either. So looking at the country itself in terms of tender rejections and capacity, like I said, capacity is very flat, a lot of moderation going on in the United States. But if you look at this big green blob and this blue blob up here, we are going to have some weather impact the middle section of the country this week. So again, what's something that disrupts the capacity in the market, especially when capacity is prevalent? The weather. So pay attention to this little corridor right here later in the week, or I should say earlier this week, between about Davenport and Chicago, where we are expected to see about a foot of snow potentially dropped in this little corridor along I-70, I-80, areas right in here. Anybody that is traversing that little section today. Now, the Joliet market, which is what I have pulled up here, you see these volumes spiking here at the end. If you see outbound volumes coming out of Joliet, which is the bigger market in the Chicago duplex of markets, I should say, not impacting tender rejection rates though, because tender rejection rates here in the green line here plummeting all the way down to about 3.76%. So very stable environment right now as it stands, even with surging outbound volumes. So what does that mean for the next couple of days? Well, if that weather system does come through, that means that travel times are going to be impacted. You're going to have delays on the road, not just because the truck's having trouble getting over the road, but also because a lot of the other traffic is going to have trouble getting over the road. So that means you may need to build in a little extra padding to your pre-plans if you are going into these markets, or even better, if you're leaving these markets, try to get a lot of freight moving south. I know that's not a huge token of wisdom, but it's certainly over the next couple of days, you probably want to get out of the way of all this weather impact so you can have the most efficient drive time possible. Looking at the Rock Island market, which is around Davenport, Iowa, you can see that that market as well is stable, and that's going to be, again, basically the starting point of this system. So anything traversing between Rock Island, Davenport, Iowa, and Chicago is going to be, you should have increasing amounts of contracted freight volumes, but a low amount of tender rejection, so it is going to be a pretty loose market. So don't expect anything on the spot market just yet, but maybe here later in the week after the weather comes through, you might have a little bit more opportunity. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi everyone, good morning. I'm Luke and I'm bringing you your broker update, and happy Monday, all right? We're at the end of the month here in February, so let's see if we can end strong. Going to take a look here at the chart behind us in blue. We've got the outbound tender volume index in the United States. So again, you can see it's been trending fairly low, but it looks like there's a tiny little uptick there. We did hit a low point there around the 9,300 mark, if you see right around here, and we've upticked and we're still pushing up. Not exactly where we want to be, but at least where it seems to be that we're headed in the right direction, which means there should be a little bit more volume or freight to move, which is a good time to gain some business. Now the outbound tender rejection here, this green line, see down here on my left, we're sitting pretty low. We're at about 5.68%. That's not quite a low. Again, a tiny little uptick, not much. We hit right around that low 5% mark. So we're starting to see that come back up, and hopefully we'll continue to see that driven by higher volumes. But we'll keep an eye on it as the week goes on. Now this chart behind, or this map behind me, is our outbound tender rejection weekly change. So the red markets, the darker the red means that tender rejections have gone down over the last 7 days up till this morning, and the blue markets means that tender rejections have gone up over the last 7 days. So some of these bigger changes are going to be happening here in kind of like the middle of the country. There's not a lot of freight that gets moved out of here. Obviously, you've got South Dakota, Nebraska, just some of these other areas in Montana and Wyoming. Not a lot of freight out in those areas, but if you do have customers in those areas, projections are moving up, so you might have some opportunities to win some more freight, call some customers up there, as well as charge a little bit more. Now, a lot of the red is happening down here really on the eastern half of the country and a little bit on the coast as well in California, Seattle. So pretty much anything that you're moving here, rejections are down. Should be a little bit easier to cover freight today as well. Also make sure you're suppressing rates in any of these markets here today as those rejections continue to go down, especially here in the border area of Texas. Now we're going to be diving into the Mobile, Alabama market. We've seen some pretty good movement there. So if you have freight there, great. You may have been feeling this towards the end of last week, but right around the 18th, we saw a massive spike in tender rejections, which is that blue line. So tender rejections in blue, we saw a massive spike from about 12% all the way up to we're sitting around like the 22% mark. And we've been hovering there for a few days now. Now this orange line is outbound tender volume. So we see that here, we went from probably around 25 on the index to close to 35. So a big uptick in volume as well. So if you're moving freight out of Mobile, keep an eye on it, that you're probably gonna have to push your rates up to cover your margins on the way up, as carriers will be asking for a premium, but there's also a lot more freight to move. So if you don't have a customer in Mobile, I would start calling customers here. They're going to have trouble covering their freight as tender rejections go up, and there's a lot more volume there. Great opportunity to land some business. Now, one more chart we're going to look at here. The blue line here, this is still the Mobile market, but the blue line is outbound tender rejection percent change year over year. So you see a 63% increase in tender rejections year over year. Really good sign. That means rates are a lot more expensive, but the outbound tender volume index yearly changes in green. So you see this 29% right here. So there's a 29% increase in volume out of Mobile from this time last year, and rejections are up 63%. So that means there's a lot more freight to move, and shippers are having a harder time covering their freight from this time last year. Great opportunity to land some business. If you are moving freight or you don't have any customers in Mobile, I would start calling the market. Shippers are having trouble covering their freight, and they're probably having to pay a premium. Great opportunity for you to come in and be the hero. I'm Luke. That'll do it for today's broker update.
Going to do for this Monday edition of FreightWaves Now. Thank you so much for tuning in, but the content does not stop here. We're always streaming around the clock on our FreightWaves TV app, so check us out on all your favorite streaming platforms, including Apple TV. Also, if you haven't already, check out our Passport program, where you get deep dives into industry trends and access to all of our world-class events like FreightWaves Live Atlanta coming up in May. Thank you so much for tuning in, and we'll see you on the next episode.
Is the trade war back on?
Trade war, full-blown trade war.
15% tariffs on $112 billion worth of goods.
Hours earlier, China announced tariffs of 5% and 10% on U.S. products.